Hey everyone, happy Thursday. Here is your weekly market update. Mortgage rate has just hit the highest level of the year. The 30-year fix is sitting around 6.5%, the highest we have seen all year. And here is why. Mortgage rates follows the 10 years treasury, and the rates has been climbing because of the Iran conflict. So energy prices spike, inflation expectation spikes. Investors just want more return to lend. But the good news is the Fed held steady at their last meeting, and there has been a pause or an ease overseas, especially with the escalation. And we can see rates could ease towards the end of the year. Some forecasters said that rates could be sitting at 6.25% by the end of the year. The big picture is that the rates have bounced between 6 and 7% for about 4 years now. So if you're waiting for some magic number, understand this: the real opportunity isn't timing the exact bottom, but it's just knowing your numbers, knowing what your payment is, what your debt to income ratio is, and just asking for a rate buy down from the lender or the seller. And those move way more than the headline. Now let's take a look at the national news. We can talk about prices and inventory. So the national home prices just ticked up slightly month over month. The median existing home prices is a little above 440,000. It's up 1.8% year over year, and the inventory is 1.56 million, an increase of 1.3% year over year. So there is no housing crash that's happening. People have predicted one for years, and the data it just doesn't support it. The reason why a crash is not going to happen because you need a flood of inventory that is crushing demand. So national inventory is basically flat year over year, and home prices have steadily increased. But the foreclosures has jumped over 20% this year. But when you actually look at the numbers, we're running about 7 times lower than the 2008 through 2010 level. So we're nowhere near a crash. So that is what's happening in the national picture. It's been steady. The rate could ease from here. Now let's jump into your local news. Now let's zoom in into King County year over year. This is July of this year versus July of last year. So for sell inventory, it's up 23.9%. Sold, it's down 11.5%. And pending is basically flat at 0.6%. What that means is that there are more homes to choose from. Fewer homes are actually closing, but buyers' demand it is still there. It's just they're waiting for the right home to hit the market. Now let's take a look at the absorption rate. So the absorption rate right now it is 26.1%. What that means is about 1 in 4 home that goes onto the market goes pending every month. So that's roughly about 4 months of inventory. So if nothing comes up, new comes up, then it would take about 4 months to clear the inventory. So we can see the absorption rate for pending sales steadily decline. Let's take a look at King County weekly. So this is the most recent week versus the week before. For sale is down 1.4%. Sold, it is up 1.8%. And then pending, it's up 7.5%. Looks like the buyers are back in the market compared to last week. So let's go ahead and take a look at the Seattle Weekly. For sale is down 3.2%. Pending is up 14%. And new listing is down 11.5%. So fewer new homes that are hitting the market, but the demand in Seattle, it is there, it is climbing. Um, so just to let you know that buyers are still out shopping. So let's take a look at the east side. For sale, it is down 1.4%. Sold, it's down also 1.4%. Pending went up 4.1%, but the new listing is down 24%. Looks like there is a big pullback on new supply on the east side. While the pending is still climbing and it's still there, it's not as great as in Seattle. So here is my takeaway for the week across King County, Seattle, and the east side. So we're seeing fewer new homes hitting the market. Pending sales has been quietly climbing. So the buyer demand is back in full force, and they are just waiting for the right home and the right deal to pop up um, before they get into contract. So if you're thinking about buying or selling in today's market, let's talk. Yeah, feel free to drop a comment below, and I'll see you in the next one.